This area chart shows Anthropic's valuation curve over the first half of 2026. In February, the company was valued at $380 billion. By May, that number exploded to $965 billion. The market created roughly $20 billion of new value every single day. On June 1st, that hyper-accelerated growth culminated in a secret S-1 filing. Anthropic is preparing to go public at a near trillion-dollar valuation. The classic Silicon Valley playbook involves small teams of coders using a $4 million in venture capital to build software, steadily growing a user base over a decade before ever considering a stock market debut. But large language models operate on scaling laws, a mathematical rule where the smartest algorithm almost always loses to the system with the most computing power. Training these systems shifted artificial intelligence away from lean software and into heavy industry infrastructure. Surviving this arms race requires capital on a scale that private venture funds simply cannot provide. To finance a planetary-scale compute monopoly, Anthropic had to abandon private equity and tap into the deepest liquidity pool on Earth, the public stock market. This bar chart visualizes Anthropic's annual recurring revenue. Wall Street is eagerly absorbing this massive price tag because the underlying cash flow is real. In just over 2 years, revenue climbed to $47 billion, multiplying 5 times over in the last 12 months alone. That cash is generated almost entirely by Claude Opus 4.8. Rather than chasing consumer traffic with a public chatbot, Anthropic built a highly secure, enterprise-grade system designed strictly for corporate use. Opus 4.8 features a capability called agentic coding. It operates as an autonomous cloud-based workforce. In a single session, the system can deploy hundreds of sub-agents to independently execute massive IT system migrations, effectively replacing entire teams of white-collar legal reviewers and software engineers. By proving that a business-to-business AI model can generate tens of billions in reliable cash flow, Anthropic established the exact financial bedrock required to justify a trillion-dollar appetite from institutional investors. Running a global network of autonomous AI agents requires astronomical amounts of electricity. The sheer volume of servers working in tandem is pushing terrestrial power grids to their absolute physical breaking points. To bypass Earth's physical bottlenecks, Anthropic recently signed a $15 billion per year strategic alliance with SpaceX. The goal is to build the Colossus orbital data centers, massive computing facilities in space harnessing unregulated solar energy and near absolute zero temperatures for cooling. Back on the ground, they are executing massive physical land grabs. Anthropic has locked in up to 5 gigawatt power agreements with legacy cloud providers like Amazon and Google, securing dedicated energy lines and the latest generations of silicon chips. The race for AI supremacy has moved into the physical world, revolving around a struggle to control the energy and silicon resources of both Earth and low orbit. The scale of this infrastructure is breaking the traditional tech investment ecosystem. When Anthropic raised its $65 billion Series H round, the required capital expenditures mathematically priced out nearly every traditional venture capital firm. The only entities left at the table are Middle Eastern and Asian sovereign wealth funds, state-owned investment vehicles from places like Qatar, Singapore, and Kuwait. They are pouring tens of billions into AI infrastructure alliances, securing raw compute power with the same urgency as securing oil reserves. The ruthless upward math of this capital cycle was heavily felt by the bankruptcy estate of the crypto exchange FTX. In 2021, founder Sam Bankman-Fried acquired an 8% stake in Anthropic for $500 million. To pay back creditors, liquidators forced a premature sale of that stake for $1.3 billion. Had they held it until May of 2026, those shares would be worth roughly $77 billion. The threat of this capital consolidation is triggering aggressive defensive maneuvers. Alphabet recently announced a complex $80 billion capital raise. By hoarding cash now, they are actively choking off the limited public market liquidity that Anthropic and SpaceX will need to execute their mega IPOs. This financial friction is spilling over into the shadow markets. When news of the Anthropic IPO broke, Zoom's stock jumped nearly 11% because they hold a $46 million position in Anthropic on their balance sheet. Meanwhile, unauthorized crypto proxy tokens tied to Anthropic's pre-IPO equity crashed by nearly 40% after the company issued heavy legal threats to clear out shadow investors. Between Alphabet's $80 billion defense and Anthropic's $1 trillion entry, the tech market has entered a zero-sum game. This IPO creates a liquidity vacuum, where every $1 billion flowing into Anthropic is $1 billion pulled away from its rivals. An IPO of this magnitude creates a native AGI supergiant, a company with its own independent technological foundation and hardware assets, operating entirely free from the legacy tech monopolies. Because the financial barrier to train a top-tier model is now approaching $1 trillion, nations in Europe and Asia face a grim mathematical reality. They are permanently blocked from funding and building their own competitive frontier AI systems. The only viable option left is a concept called sovereign AI clouds. Foreign governments are now forced into agreements where they pay heavy premiums to rent localized server space and digital sovereignty directly from American AI giants. With total market dominance, Anthropic's internal rules become global standards. Their specific constitutional AI safety guidelines, the ethical guardrails hard-coded into their models, will effectively serve as the unelected regulatory law governing how the world's businesses operate. The macroeconomic impact of a $965 billion listing will ripple through the stock market the exact second the opening bell rings. Because of its massive initial valuation, Anthropic will automatically trigger index inclusion rules. Within weeks of trading, the company will be forcefully inserted into the S&P 500 and the NASDAQ 100. This triggers a mechanical chain reaction for the global public. Massive exchange-traded funds, 401k retirement accounts, and state pension funds will be forced to buy tens of billions of dollars in Anthropic stock, completely independently of what the fund managers actually want. The Anthropic IPO is the precise moment the global public is conscripted into funding this industry. By going public at this scale, every citizen's retirement portfolio, job security, and geopolitical future becomes permanently tied to a single $1 trillion machine.